Hi there, traders, and welcome. Now, this is just a quick video to update the current gains on the 5-minute trading day. So I just want to go over those. Last week's been pretty good with the bulk of the gains made in the Hang Seng with the volatility still hanging around. So those opens have been quite consistently targeting that 30-point gains, whereas the Dow and the DAX have been sort of oscillating between some wins and some losses. So we'll take a look at those in just a moment and a couple of examples and what to be wary of on particularly both of those markets. It seems that some of the volatility has come out, especially into the DAX, which makes taking that 10-point a lot tougher. You need that pickup in volatility, so we're just going to take a look at that. But either way, it's been going okay. I mean, it's not losing; it's actually putting on a bit of points, but nothing too spectacular. Whereas, like I said, the Hang Seng has been performing very well. So we'll just take a look at what we're up to at the moment. And last week it brings us to a gain of 190 points in the DAX. The Dow's 290 points and the Hang Seng's 511 points. And that brings us around 83.73% strike rate. So we're hanging above that 80%, which is really nice. Okay, but being a one-to-one strategy, you want it to be over 50, and being 80 is very handy. Okay, and that takes us to 39 trading days from the 31st of August to the 25th of October, which was just yesterday. All right, so we'll take a look at some charts on the DAX and the Dow and just go through two examples. So we'll just talk through the Dow trade from last night. So this was the opening at 11:30, and that was the index open. So the last green candle where you can mark off your high and low, that was at 12:29. And you can see the very next candle popped through the highs. Now the problem with this is not where I would have taken an entry long for that opening breakout, for that opening rush, because the market had already set up quite well, and there's really what you're looking for, remember, is for buyers to get squeezed out of the action, sellers to get squeezed out of the action on the top side and buyers on the bottom side. Now, when you're on the top side, you head into new highs, there's really no real reason for any sellers to get squeezed out. The market's been ticking higher, buyers are in control. They haven't formed any sort of resistance zone or a clearer level. Okay, and as you can see, it popped through only by a few points, and then it comes diving down. Now on the bottom side was a different story. We had buyers building up here, holding a higher level. So there's quite a few buyers been building up, and as the market comes slamming down, it basically took out those stops, targeted the sell stops back into the market, and easily gave us our 10 points target, which we're looking for. It actually carried on a bit longer. So this is one of those examples where if you did it within 2 trades, you could have had a strategy trade just for that quick 10-point target, and you could have had an opening sell order, okay, just to see where it went. But in essence, that was pretty much, it was all looking bullish right up until that last minute, and then bang, comes slamming down. So really was a tougher gig, but it really did pay out well. Over to the DAX now for an example there. On this one it was an example that it did pay out on the short side, like the Dow previously, but it actually stopped out on the top side. So what you'll see on this one is that it was a bit the same theory behind the Dow. You've got the markets pressed down, and it has built up some buyers, a lot of buyers on the upside. So if the market was to turn around once it opened and headed straight down, you know that there's quite a few stops built up on the sell side, selling back into the market that can easily get triggered and pressure that market down. Okay, but on the top side, it was all looking good right up until that last minute. Okay, so this would have been a prime level, inside level around 15,575. If it could have held below that level on the open, then that was great. But instead, that last minute, it sort of took out those stops there. So anyone that was selling into that level just been cleaned out in that last minute, which means it's sort of open now. So there's not really much fuel to trigger that market higher when buyers have to buy back into the market and get stopped out because it's already been targeted. So really, you're just looking at that first 1 minute candle. There's really not a lot of pressure on that candle there. And as you can see, the market did kick off. It fell short. I think it got about 7 or 8 points. We're looking for 10. So it might be something where you might want to reduce it. You can potentially trade that, no problem, but you may just want to reduce your target. So that's something we'll be looking at down the track. On the flip side, when the market did head south, it did come screaming back down. So we took a loss in that first one and we made it back on that second trade. It did nearly hit, I think, 10 points, popped up and then come screaming down that last, probably about 4 minutes past the hour. So that turned out quite well. It neutralized the first loss. So all in all, it was a flat session on that one. So what we'll do, we'll keep you updated next week and see how it goes for the rest of the week.